put on the recorder for later. I want to thank everybody for being here tonight. Looks like the diehards. We get a couple of hundred people when the markets are going up, and it shrinks to just the dedicated folks amongst us that show up when the markets are not so good. But we can actually make money on both sides of the market here. So let's get started here. I think you guys are going to be in for a treat here. Let me bring up. All right. The bear market is in ICU here at the moment, or at least in the hospital. ICU might be a little bit dramatic there. Or I love this when I saw this, said that the fire has died down. It's not flaming around their ears, so I think that's funny. Anyway, let's get started here. Let me move this up here so I can see. Okay. Let's start off with a disclaimer. Folks, trading involves the risk of loss of capital. You can lose money here. Anytime, if you want to try to do something for the first time, try out any strategies or anything that I talk about or anybody talks about, please simulate trade it, paper trade it type of thing. Get familiar with it and then start slow, because you could get in over your head very quickly if you're not careful. Background. For those who are new here, if you are here for the first time, please identify yourself. I want to thank you for showing up, and we're here to help you. I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business. Active trader since '98, full-time since 2009. I cannot believe I've been doing this for 11 years. Technical trader, what is it? What do they say? My how fun flies when you're doing time. Anyway, I'm a technical trader. I use limited fundamentals as well. I moderate for Hit and Run Candlesticks from time to time as required, filling in. And I do provide one-on-one mentoring if you are so inclined. The three legs of the Hit and Run Candlesticks family are Hit and Run Candlesticks, the Right Way Options read by Doug Campbell, Hit and Run Candlesticks by Rick Sadler, and LTA Scanner led by one and only Ed Carter. Stick around for some special offers toward the end of the presentation here. And I mean that. They're really good, and one of them is going to expire this coming week. A little agenda here. We're going to go over a lesson of the week, and I've chosen using StochasticRSI to improve our results, and that's what it's all about. It's about results. We're going to talk about identifying best trades, then we'll go into economic and earnings calendars, market overview, go over a list of trade ideas, some Q&A that are non-stock specific, and then time permitting, we're going to look at your stocks. We've got a really full plate tonight, so let's get going. All right, lesson of the week. I'm a firm believer in StochasticRSI. Some people try to say that oscillators are the greatest thing since sliced bread, and I say no. They are pretty darn good, especially if you know how to employ them and employ them properly. If they're used inappropriately and incorrectly, they could actually hurt your trading. What is the StochasticRSI? The StochRSI is an oscillator of an oscillator, really, and it measures the change of RSI relative to its high and low over some period of time that you choose. Well, I choose 7 days, or 7 trading periods, trading days. And so, like I said, it's an oscillator of an oscillator. It generates oversold and overbought signals. It can also generate more false signals than, say, the standard RSI. And if you want to find out a little bit more about it, it was developed by Tushar Shande and Stanley Kroll. Tushar, one of my favorites. A couple of indicators he created got me started on this oscillator thing. One was the CMO, the Shande Momentum Oscillator, and since the CMO wasn't in things like TC2000 and others that I was using, I have basically been able to replicate it by using the Stochastic RSI that's in almost every charting program out there. It dramatically increases signal count. It's kind of like having RSI on steroids, but the downside is the more false signals. I only use it as a secondary indicator. I do not use it as my primary. It does not give me a go long or go short signal or a buy or a sell signal. I combine it with price and candlesticks to result in increased probability of success. And I'll show you some examples when we talk through the charts tonight. I will caution, tap, 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 knock on something hollow or my head. It's a very volatile indicator. You can get, again, like we said, the false signals. It takes some time to understand it, or how to apply it, and how to integrate it in with the price and candlesticks that you see. And I suggest that you could only use it to confirm price and candlesticks, primarily because it's based on price. And price is going to move first. So watch them. All right, let's go over here, the Monster Daily setup. And basically showing that this was in a previous downtrend on daily chart. And it got a surprise here, earnings, haha. And we had gotten to an oversold condition down near zero, and then we gap up, and lo and behold, with price moving sharply higher, Stochastic RSI confirms it because it's confirming momentum. That isn't always the case. It has to be with momentum with volume. And so therefore this volume indicator here is really what makes this thing really really good. And you can tell by using the Stochastic RSI that it does the judgment of whether the volume is much larger than more normal, about normal, or less than normal. Okay, and again, up here at the top, we've got price. We're breaking the downtrend. We're breaking through basically a breakout level on Monster, and this is just confirming it that it should be good to go. All right, here's the 60-minute. Notice that I drilled down to the 60-minute and we paused at that $57 level. And then we continued our rise. But wait, Steve, you said that the Stochastic RSI gives you the indication that it's, gives you the permission to go long kind of thing. Well, no, it's just confirming price. But the strongest of the strong are going to stay pegged at the top. The weakest of the weak are going to stay pegged at the bottom. So you really can't use it as a go-to. Be all, end all. All right, we're looking at Duncan. It also has that break of the downtrend. The candlestick pattern here where we have a hammerish type of signal followed by the move higher the following day, probably on earnings again. And Stochastic RSI is only just confirming it. KKD Daily and how to enter. Well, we're in the breakout. And you gapped up above this $15 level, which was prior top of the trading range. So we did the breakout. A lot of people say it's gone too far. I can't enter here. How can I do that? Well, one way is to possibly drill down to a lower time frame. Well, the 15-minute showed that it basically paused around 17. We'll go back to the daily. And you see how 17 got a long ways away from the move up period. But then you could, if you wanted to day trade or to enter a trade, you could go higher. I chose 15 minutes here because it shows better than the 5 minutes, which basically goes up 3 bars and then, 6 bars and then goes across to the afternoon and then starts higher. So you could choose which time frame you want to look at. 60 minutes is good, 30 minutes is good. I would go no lower than a 15-minute if you're a swing trader. Probably no lower than 30. Now here is the SanDisk Daily. I wanted to point out that on the double bottom here, this is doing kind of a W pattern here, but let's just say that we're only sitting here around the 6. Is this going to be a double bottom that succeeds, or is it just going to be range bound and roll back over? Well, one indicator that it might succeed was we look at the Stochastic RSI here. It goes up to about the 80 to 90 level, then rolls over as price rolls over. We do a retest to the $51 level. Momentum only got back down to the midpoint. That would have given me a clue that this, if we can get it going back to the upside, this could have some legs. And in fact, it did. And you look over here to the right, we have a J-hook pattern over here. This basically is a W and handle, kind of cup with a ding in the bottom. And there's the handle, and Stochastic's RSI is rolling up. Now, Stochastic's RSI can aid in entry. How so? Well, this is a 5-minute chart on SanDisk. Again, looking back over here, I think it's the 20th, May 30th. Okay, so I guess it's this day right here, around $59. Okay, and let's look at what happened when we had $58.50 to $60. We get a gap up, did a pullback, momentum pulled back here at the open, but price really didn't budge much. We're talking each one of these squares is only 25 cents. Now that's nothing in today's market, but back then it was a fairly significant move. 2013, and then we start our move up. You can see it's confirmed at the midpoint by the Stochastic RSI. You could go long on the breakout there, or wait for either a pullback here. One of the problems here of trying to go long on this candle right here around 10:15 is, even though price is moving up for about 30 minutes, we're a little long in the tooth on our Stochastic RSI. Well, you said, Steve, that the strongest of the strong will continue to go higher. Well, they will. However, this is telling me that when I'm pegged up here, if I'm going to go long, or I am long, I need to exit stage right at the first sign of weakness, because we're going to pull back, and there's no way of telling how far it's going to pull back, when it's going to stop. Did a little pullback here, about three candles. Stochastic RSI pulled back, gathering momentum for the next move, and then boom, it moves up. We get a bullish candle signal confirmed by the momentum indicator here, our Stochastic RSI. And I want to point over here on the last one, we had price moving up in a bullish candle and bullish price, but Stochastic RSI was actually going lower. That's looking at the volume with the price, and it's telling you that it may be going up, but it's going up on less volume. Well, price is king. As long as it goes up, you can make money to the long side. However, it's like a salmon swimming upstream here. Eventually, it's going to have trouble, especially after running up for a few days and then getting up to the breakout level here. So the odds are lower. I'm not saying they're lower, they're lower odds. So I don't change that slide. All right, it works on other time frames as well. Like we've already seen the shorter time frames, but let's look at the weekly. On the weekly, we get a smoother turn. Instead of getting sharp, kind of V-shaped patterns as we got on the other daily and intraday charts, you're going to get a rounder bottom and a rounded top. Well, the reason you do that is because you have 7 days in each one of these. So 5 trading days. But we have a candlestick pattern here. We have the RSI crossing up, although it's just barely crossing up, and it is confirming the move. However, there are no guarantees. And what I said, the weakest of the weak Jordan was down here pegged at the bottom, and it kept lower and lower and lower and lower and lower. And even though we got this gap up, it failed to continue the rally, so therefore Stochastics RSI only tells us and gives us a confirming indication that this rally is not going to make it. All right, I want to open up for any questions on Stochastics RSI and just Stochastics RSI. Do you have any questions on that? I will let you know that I have a full webinar on my YouTube channel on how I use Stochastics RSI. That's about, I think, about an hour long. And we do have a multi-session that you can purchase on Hit and Run Candlesticks that talks about, it's a webinar that we gave, a series that we gave on Stochastics RSI. Okay, with no other questions, let's move on. And let's talk about identifying the best trade ideas. Well, I use earnings lists, and if anybody knows me, knows I'm Mr. Earnings here, primarily because I know that stocks that are on that report earnings are going to probably move. One way or the other, they're going to move. They're not going to sit stationary, mostly. I pre-filter for average daily volume, and they're most likely going to be good candidates for big moves, and I want a big move. I want to make money. On there, I do not trade in pre or post market. Volatility and lack of liquidity, wild swings, especially during conference calls. And the big boys, they either trade off on their own, off of the market, or they wait to the regular trading hours. I do use a 5-minute opening range for proof that the move is real. If it will break above the opening range, it gives me permission to go long. If it breaks below that 5-minute opening range, it tells me either one, the rally is failing to the long side, or that it's going lower if it's the short side. So I'll copy my earnings list to the LTA scanner, or use a master universe list over here using my broker. I have the LTA scanner identify pre-market gappers for me. Then I'll, in a nice, quiet, calm atmosphere, sipping my coffee, I can look at them and see if they're pretty good or not, and identify them and put them on my watch list. I can analyze them for possible trades. During the day, use the LTA scanner not only to look at those earning gappers to confirm which ones I should be interested in, but to monitor my holdings and to look for new trade ideas throughout the trading day. I will say that this is Ed Carter and his group have done the best job of creating a totally flexible and customizable product that I've ever seen at a reasonable price. Rick and I used to pay $250 to $300 a month for what was actually a less capable and less customizable system. This is basically built in-house and is, to me, the greatest thing since sliced bread, and we need to thank Ed profusely. All right, LTA scanner. Ed does a webinar every Wednesday in the live trading alert room. And I'm not sure, if this... Ed, correct me if I'm wrong. Can you post out I think I've got it. Hold on. All right. Here's live trading alerts. Find out more about there. We have our free room. The live trading alerts go there to get the support during market hours. And that's it. I'm going to go back here. Okay, every Wednesday at 2 p.m. No password required. Even people who are not subscribers to LTA can attend, although it would be most beneficial for those who are, but also for people who are looking to join. There is a overview and fast start guide. I believe is still here. And if you want to do a sign up, we currently have a sale on. Ed does for only $97 a month. But the sale ends this week on the 3rd at midnight Eastern. Actually, he tells me 11:59 Eastern on the 30th of June. So when the clock ticks over to the 1st of July, this goes away. It's time to do the proverbial or get off the pot. And one thing will happen is that you will be grandfathered in at $97 a month as long as you continue as a member. That's basically saving 1/3 off the price. All right, enough said. All right, let's get started then on the meat of the matter tonight, economic reports. We do have pending home sales out tomorrow morning at 10 a.m. I'd be interested to see how that goes. I've got a little, not a wager, but a discussion going on with one of my neighbors. He thinks that the housing market's turning to trash, and I went, well, it probably isn't. It depends on probably on the market that you want. That housing market, the supply is really reduced, and the people who have been laid off are really on the middle to lower end, the hourly workers, unfortunately, and those who had other jobs were able to work from home and work remotely. So I think this has had less of an effect. However, if we continue to see bad earnings, it will eventually trickle down to everyone. Okay, so then on Tuesday we have the Case-Shiller Housing Price Index report at 9, Chicago PMI 945, again after the market opens. Consumer confidence at 10 a.m., a biggie there. All of these, not necessarily the PMI, but the consumer confidence could definitely be a market changing event. Then on Wednesday, pre-market, the ADP employment report, PMI comes out at 9:45, ISM at 10, both of those, and construction, but primarily PMI and ISM could be market moving events. Petroleum report, I like to trade the petroleum report. We're getting back into kind of tradable country now for me, not as wild the swings. And FOMC, this Blue Star for 2 p.m. Eastern on Wednesday. Usually could be some fireworks associated with that. Throughout the day on Thursday, we're going to get motor vehicle sales, starting with some stuff around 7:30 in the morning and trickling throughout the day. Employment situation report for the week is out at 8:30, along with international trade and jobless claims. Factory orders at 10 after the market opens. Nothing out there on Friday the 3rd, primarily because an awful lot of people are taking Friday the 3rd off for the celebration of the 4th of July, Independence Day. This is Earnings Whisper's view of the important reports for the week. Not a lot. So we're almost in the dead period. I do have the ones that are reporting this week, and the ones that are reporting with greater than about 8% of short interest are highlighted in yellow. And these are pre-filtered for volume, so anything that has volume less than about 400,000 is not going to appear on my list. I am definitely not interested in them. All right, let's go on over and look at the market. Our markets. Okay, this is crude oil. I said it recovered quite a bit from this down at $10. We pushed over 40. This is looking at just short of a 6-month period, and we've done a heck of a rally off the bottom. And we're now getting to try to fill this gap. The gap, actually, we filled the gap at about $42. And now you can notice here where we get, here's my stochastics RSI. You notice how we went down to just above the midpoint. We pulled back and we started up and we're still going up, but the stochastics RSI is pulling back and the price went sideways. That is a great indication that it's building momentum to go back to the upside pretty hard. And in fact, once it started to move and broke out above 35, we moved to 40, then again ultimately to 42.5, but we went to 40 pretty rapidly there. About a $7.50 move. Then we did a pullback, and again we have our price and action here at the top and the candlesticks. Gold really hasn't been going very much of anywhere. Let me take you out to 9 months. That's 9 months. We haven't, that's not 9 months. That's 9 months. We dropped down in March when the COVID scare happened. The bottom fell out. It immediately recovered, really. And then it's kind of been trickling higher. And I think because right now, there's really only two places for investors to go. One would be stocks, because what else is going to make you money? You can't put it in bonds. You can't put it in any interest-bearing events. Or you can put it in gold. You can't put it in oil, although in the last couple of months, oil has been going higher. But the flight to safety usually is either bonds or gold, and in this case, though, it was the markets. Let's take ourselves back to a 6-month chart on the S&P. We did our nosedive in March, came back right now. We hit, I think a couple of weeks ago, I talked about the volume at price. One of our look at the week aheads, the lesson learned was talking about volume at price. We hit the point of control on price almost to the point of just right on the dot of 32.35, and we pulled back really hard the first, I guess about the 8th to the 10th of June. We pulled back to where? To the 29.75 level, which was another kind of shelf of combination of prices, which is primarily, but it also takes into account the volume at those price levels. Then we did a bounce, and we bounced up to 31.10, and then we rolling over. We have to stop this downward trend. Right now, the markets are in a downtrend, and I define an uptrend not just by the moving averages, but we're making higher highs and higher lows. So you can see here we're doing higher lows, and you can see that we're doing higher highs as we inched higher. We did a little bit of a spurt to get up here to this point of control and pull back really hard here on the 11th. And then we kind of took a day or two to catch our breath, and then we bounced back up. Basically around half of the distance between 29.75 to 32.35. I'm just eyeballing it. And we spent about a week there bouncing back and forth, and now we're creeping back down towards this 29.75 level. Now I am going to go over to TC2000, and what I want to show is the T2122, the 4-week new high, new low ratio. This is not something that I invented, but I've taken this and put my own spin to it. My own spin and additions to it were the pullback zone and the bounce zone. The pullback zone anywhere, and I've been looking at this ever since I started trading, but really closely around the year 2003, 2004. When we got above 85, somewhere between 85 and 95, most of the time on this green line, which is the percentage, when we get that many that are making monthly highs, it's time for us to pause and pull back on it. Now, usually that means when that percentage pulls back, the market pulls back a little bit, or at least goes into pause mode. Conversely, when we get down below 20 to as low as 7.5, and sometimes we've hit 0 like we did back here in March, we're going to bounce. Now, the bounce zone is more accurate, and I can count on it more than the pullback zone. The bounce zone, when we get there, we're going to get a bounce. I don't know how long it's going to be. It may only be a day. It could be a turnaround and we're back to a rally mode. Most of the time, it's not that first one. And I also have no idea how high the bounce is going to be. So when we got here, we did the bounce, and then we basically started moving higher again. Over here, we got our bounce. We moved up, moved out to the 50% point, and then we started rolling over. So in this last one, it wasn't a great bounce, and you could tell that also with the T2122. All right, it's back. So let's step on over to the Dow. The Dow looks an awful lot like the S&P, but I don't believe... Yeah, the S&P, its point of control was a few percentage points below the high, more so than the Dow. Get only 30 stocks. Its high on volume point of control was up near the high. So we got to a relatively same period high, but not a volume high. And that's why 27,200 was my target. We got a little bit over it and rolled back. And we're still making lower highs. And we made one lower low, not quite a lower low. So in fact, right here, if I were to draw, I'm going to do that. If I'm going to draw a line, we've got a wedge going on here, just like we do in the S&P. The closer we get to the apex of this cone, we're going to make a sharp move up or a sharp move down. We're going to break out of it one way or the other. Now, NASDAQ, we have had the techs took a big hit in March, but they've actually been the area to be trading in since mid-March, into March, they'd say the 1st of April. We got into an uptrend around the 1st to the middle of April, and we have only just now threatened that. Now, if we could stop right here and go back up, the rally will still be alive in tech land. But if the NASDAQ tries to go higher and the others don't follow, except for the Russell, if the S&P and the Dow don't follow and turn around, the NASDAQ days are numbered. It's only a matter of time. Even though if it makes a new high again, it's probably not going to be, quote, forever. So just be careful. The Russell, the red-headed bastard stepchild here, weakest of the week. Primarily, it makes sense if you think about it. We're being hit. The multinationals that are in the S&P 500 and the Dow, they have other markets that they're counting on. But the Russell, the small caps, they're only counting on mom and pop and us around here locally. And we're having troubles here. Now, we are still, let's look here. We still have a similar wedge going on here, but we're not getting as much, we're not really getting as many higher lows, lower highs there. How to best say that? The lower highs are lower than in the Dow and S&P. Let's put it that way. I'm going to bring up the VIX. The VIX was in a down move, then we get a big spike up. Be careful. I think we could do another move to 40 to 45 if the markets don't hold. That's going to be on our watch list here. Okay, let's go back to the presentation. All right, let's go over some trade ideas. Let me go ahead and post them out. Oops, I forgot to copy that over. Well, let's do it this way then. Take care, Malcolm. It's going to be in split mode because of the lines. That's why I copied it over. Should have copied it over. Those are the longs and the shorts. To me, it was a lot easier to find longs than to find shorts. I'm going to go over the longs here. BioCrest, downtrend, broken on Friday. Stochastic RSI is up at the top. We need to get follow through, watch volume, but a move to 5.5 to maybe even $6 is possible. BSIG. Now, let me go back over to TC2000 for BSIG. And I say possible 15. Why? Because of this. We're now in that gap. If we can get going over 12 and the market gives a little bit of help, I think we can go up to 15. Chegg. It pulled back a little bit with the market, but it's not really seeing any real negative effects. I have no idea how education and training, with all the schools closed, all the universities closed, and it's still doing okay. No idea. Follow the charts. Don't try to rationalize it. Mr. Elf here. Huge short interest. Right now it may not be as high as 69, but this $20 level is hanging out there ready to be retested. So if it gets over 19, we could run another dollar. That's only about 5%, folks. Etsy, setting up for a possible pop out of the box, a Poot B. Guidewire, looking for a potential move, a little overhead resistance that we see here on the 4th of June, which also goes all the way back here to late February. But we also have target hanging out there about 123. So the first target would be in this 115 level, and 120 to 123 would be the second target. Lumber liquidators, been on a roll. Surprise, surprise. Ever since, I think this was the earnings date back here, and it's been on a roll. I don't know how you would get on board other than let it come back to the T-line and give you a bullish pullback opportunity. LVGO, another one strong. We're at all-time highs. It only has a short history since about July, August of last year. And we did a breakout above 63. This one moves about 6% a day, which could $4.74. That could be a little more volatile than some people could handle. But again, it gave a bullish signal on Friday. Another one I mentioned a few weeks ago was QDEL. That it came back and then it popped up here, went to a little over 200, and now it looks like it may be trying to set up for the next move, and we're again at all-time high. So Spelunk, all-time highs again. So wait for the pullback, bullish candle signal, and go. SPWH, again approaching the all-time highs of around $14. Sportsman's Warehouse. Look at this area chart right here, and those, well, yeah, all-time highs, I guess, is this 14-ish. To you, possible target of 62. Possible target of 62 is this right up in here. but we've got to get through these levels here, and there's a gap that forms here, I guess at 46 to 47. But right now, we're looking at a possible breakout. And the first target, I guess, would be 48. So I'm going to put down 40. I'm going to change that to 48/62 and make that targets. Okay? And the last one on the longs. We actually had some longs here. Vista Outdoor. It says leisure, but isn't this the advertisers? The billboard people? 14 bucks. Look at the weekly. $18 is just hanging out there ready to be retested. All right, let's go look at some shorts. All right, I'm going to tell you that I had a tough time finding shorts. Wait a minute, Steve. I mean, we had a pretty nasty week and day on Friday. Yeah, and that's why I have a tough time. I want to point out one of our members who came in here on a Sunday night 2 weeks ago, maybe 3 weeks ago, pointed out that Pfizer looked like a short to them. Now, we were in the middle of this bearish flag, the pennant, and then it failed. This is a classic inverted J-hook pattern, and they brought it up. I put it on my list, made some short money to when we got to 33, and haven't gone back in. Okay, and I want to thank whoever it was that pointed that out to us. But the idea of having a group looking at things, you have so many more eyeballs on it, and people can throw out trade ideas, and you can maybe be interested in 1 out of 10, but it's possibly 10. It's one more idea that you never had yourself. So I think that's a great idea. That's why I love being in a trading room. All right, here's where we're going to find that we have some problems. The shorts, Capital One Financial, it broke through on Thursday and Friday through the bottom. Well, we're at kind of a bounce level here around $60. I think we're going to need a bounce back up, maybe up towards this $62 to $65 level, and before it rolls over, before I'd want to get in. Stochastic RSI is not helping me out here at all. We're not getting any kind of V pattern. CSX Corp Railroad, it broke down on Friday. We could go down here to 65. Let me go here. All right. We're probably going down into this $62 to $63 level. We could go as low as 60. I'd love to see a bounce. You may not get it. You may get an intraday bounce. Let's stay here. Let's go to the diamonds. The diamonds break through this 250 level. We're headed for 241 and change. Maybe into the point of control here, about 237. We just change that to 241. Give us an idea. We're 240 on to 240. Garden restaurants. I'm not sure about your neck of the woods, but in Florida, they had opened up to 50% level in bars and restaurants. The bars weren't following the rules. They took away liquor licenses and whatever. They finally just shut all the bars down. They said, enough of this. And one of the other things in the COVID country is that the last 2 to 3 weeks, the number of cases, the age group of the people who are getting new cases, the median age is 29 years old. Youth is wasted on the young. I would say something that fighter pilots say about blank blank and all blank and no forehead. They just don't. They weren't being smart. Anyway, we break below 70 on DRI. We're probably heading to the low 60s. Another one that's getting hit is the banks. Now, if we look at FAS, F-A-S, you can see that pretty well, that we're probably going to drop down here. 29, we're probably anywhere. I think 26 is inevitable, potentially 24. Okay, so let's go back to the banks on the negative side, F-A-Z. All right. Okay, the bears, and I need to blow that up a little bit. We break above about 19 and a half. We're probably not stopping until we get to 23. That's just the way I'm seeing it. Okay, I'll buy that. Some of our leaders took it on the nose, on the chin on Friday, like Google and Facebook. They're the next two up. You can't go short here. You're going to need a bounce. But these are litmus tests. These are temperature of the water, the canaries in the coal mine. This is telling us that we've got some problems. Underlying problems. Google, same thing. Can't go short unless you get a bounce first. But this is telling us that all is not well in tech land. Here, Goldman slacks. Same problem with the financials, the banks. That's big banks and regionals, but the big banks took it on the chin harder on Friday. I think we're down to 180 on Goldman. Would love to see a bounce, maybe back up to about 195 or so, but we may not get it. Nike, down hard, need a bounce. Although the break level would be around 93 and a half, but be careful. There's the confluence of the 50 and 200 day moving averages there. Some people may start to nibble there. Stochastic RSI tells me we've got plenty of room to the downside. I'd really jump on Goldman Sachs Nike short if it can get a little bit of a bounce up to maybe 95. Spiders, it's sitting right at the 200 and getting close to the 50, close to the support of 294. So anything below about 297 and a half. But again, we've kind of missed the boat. We could have been short over here 2 or 3 days ago, based on the candlesticks. We would have had to give it a little bit of room there on Thursday, but in fact, this green candle never changed anything for us because we were still in that downtrend. And the final one we've already talked about a little bit is the VIX. Over about 35 to 36. I think we could head to 45. All right, let's go on back over to the slides. All right, talk about there's a 60-day trial offer. I wonder how many people in here are trial members for 2 months of either Hit and Run Candlesticks or Right Way Options, or were in the past. And I'd be interested to find out how many people actually converted, because a lot of people are signing up. A lot of people are really liking it. All right, TD, thank you. And you're, I think it'd be hard pressed to find a better trading room to be in. I was in a number of trading rooms in the 2000s, since 2000, I guess, in 5. And this is by far the most affordable, most reasonably priced, and one of the best ones out there. Yes, go out to that link there, Vic and Mel. Mel, that is the daily chat room. And we don't have a free trial, but you have $49 for 60 days. And Vic, the difference is right way options in the name. It focuses on trying to teach you how to trade options using that as the vehicle, but it basically talks about price level. Now, if you want to find out more about what Doug does, right way options in YouTube, would type out, yeah, thanks. Johnny Mac, okay. So the difference really, the Hit and Run Candlesticks HRC primarily focuses on stocks, although Rick uses options and he talks about trading options. The actual training on, the best training on options is from Doug Campbell in the in the Right Way Options Room, the RWO. So if you're interested in learning everything you never wanted to know about options, join Right Way Options. If you want to know about support levels, target levels, resistance levels, join either room. If you want to talk about primarily stocks and I guess shorter term type of trades, Hit and Run Candlesticks is for you. So we have a little bit of each for there. I'm usually, it varies, Vic. It's based primarily on the markets. Rick has trade ideas every day. And like we just showed earlier, there are longs and shorts in every market. We could be going down and we can get longs out there. We can be going up and we can get shorts out there, and vice versa. So we just take each individual stock on its own merits and then put them out for trade ideas. And people bring their own trade ideas and we discuss it in the room. I tend to spend most of my time in the Hit and Run Candlesticks room. If you want to follow me, I don't do an awful lot of posting, but when I do, when Steve talks, it pays to listen here. I'll break my arm, pat myself on the back. Umesh, you can try one at 49. That's what I would suggest, to choose one. Not to sign up for both because you can't be in both. And if the trial offer is still out there, which I suspect it will be, but I can't guarantee it, at the end of a 2-month period, if you don't like the room you're in, you can go on over and try the other one. I would strongly suggest you do not try both of them at the same time. You will not be able to be in both rooms at the same time. Okay, thanks, Ed. Appreciate your help. All right, I'm going to open up for general questions. This is not stock specific. If you post a stock out there, I will ignore it and I will not come back to it. You're welcome, you guys. Anybody have any questions? While you're doing that, I'm going to wet my whistle. We're a little under an hour. We're only going to have about 15 to 20 minutes because it's 9 o'clock and I have not had my dinner and I'll get grouchy. Oh, no problem, Vic. You're going to stick around for any... all right, we'll take a look at your individual stocks, one and only one, and please identify if you're either long or short, or you're looking at a long or a short. Okay, Thomas D. He's in Netflix. I'll go back to TC2000 here. It's easier to move around. You're in a bear call spread. Well, that looks pretty decent right now. I have trouble going short stocks that are in an uptrend, which this is above the 50. So a longer term uptrend, but a shorter term trend. Watch for that bounce as we get close to, it's going to be the rising 50, around 435, but it's really this price level. And I'm grabbing it off that candle right there. 435 ought to be your target, somewhere around there. Let's get rid of some drawings here. At least that ought to be target number one. And you could get a bounce against you. And then if the markets still continue to get weaker, 415 to 405. Let me take this off of. Okay. Yeah, okay. It's not on scroll. Good. Okay. MT wants to look at Procter & Gamble short. Yeah, it does. One of the problems with Procter & Gamble, it doesn't move a lot, but with an options trade, watch for a move to 114.5. Maybe a little bit of a bounce and then a rollover. My Stochastic RSI tells me we're due a bounce. What does the market tell us? We're due a bounce. It's in the S&P 500 and it might be in the Dow. I don't follow the Dow like Doug does, but let's face it, this is probably overdue a bounce here. But right now, we're in that trading range. So if we break that trading range to the downside, it's time to go short with first target around, call it 111.5. And if we break to the upside, the first target's around 125. Okay, Umesh wants to look at Square long. I hope you've been long, because after the gap up on earnings here, the 45-degree move, we took some nibbles twice. Rick's made some decent money on it, especially this last move up here, and I think took profit on Wednesday. Now, it's struggling to try to go higher. It's been one of the winners. Stochastic RSI is telling me that it's trying to build momentum for the next move. Price is king. Area chart tells me we're at all-time highs. So I don't have any overhead resistance. We don't have any built-in sellers above us. But I'd like to see a pullback. I'd like to see either a sideways move or a pullback maybe to 100. That would be a perfect move for me. Either one of those works, and then I'm going to need a bullish candle of some sort. Either something like, something like we saw over here, something like we saw here, something like we saw here, something like we saw here. I'm going to need something that gives me a bullish condition, a bullish candlestick pattern. And if it has Stochastic RSI backing it up, that's just gravy. Dahl wants to look at PayPal. Hello. PYPL. PayPal's been on a roll. People have been staying home and been shopping and paying through PayPal. And it's been, you just basically wait for it to do a pullback. One of these times it's going to pull back to the 8 or the 17. Maybe now if the market pulls back or goes sideways, 167-ish. Then it doesn't move an awful lot. It moves $5, which is only 3%. And I bet you the options are pretty expensive. But it does look like it's in an uptrend and it's still there. It's still intact. Wait for a pullback if you can. RV wants to look at XLF short. Well, yes, XLF short works. It doesn't move a lot. It moves 4%, 92 cents a day. One of the things you may want to consider is FAS. Remember we talked about that. You'll get leverage of that. It's a triple, so you don't have to buy your options. They'll buy them for you. The one thing with that is the downside with that is it rebalances every day. And if it goes a day or two against you, that can hurt pretty significantly your profits. So however you want to do that, XLF does look short. The financials definitely look short. Yes. Johnny Mac, NVIDIA long. I don't see the signal in the last couple of days as bullish in any way. That right there is an Oreo sandwich, according to Doug Campbell, which is two negative candles on the outside of a white creamy middle. Bullish in the middle. Unfortunately, that is bearish, and I suspect what's going to happen is that with the market weak, we're going to break through this, and we're probably going back down to the bottom of this old trading range. So whether it's going to be 352, 350, whether it's going to be 340, I don't know. But right now, I believe we're going to got a couple of these 2 or 3 days to the downside. It moves about $14 a day. So if it has one day, that's 352. If it does 2 days, it's 340. It could get down to 340 in 2 days. And that's if they were just like Friday's candle. Okay. D wants to look at hog for short. Oh, blasphemer. If anybody knows, my nickname is 1973 Hog. It has nothing to do with Harleys. It has to do with a Arkansas Razorback brand from 1973. The one problem I've got with this one there, D, is that we're sitting right on top of the 50, and we're going to probably attract some buyers here. Although I see what you're saying, I don't agree that moving averages act as support or resistance. And I see the first target here around 21.26. Maybe we could get all the way down to the 1950s. Let me see if yeah, the point of control was already above us. That won't be a problem. There's the 50. The 21 level has some volume there, if I'm looking at it. And the volumes are pretty much the same all the way down. So 21 and then 18. Those are the two target levels. Watch that we don't get a bounce here. Oh, you're welcome, Bob S. Now what I'm going to do is I'm going to set up no more stock symbols, please. My tummy is growling at me. Alright, let me get back up here. John wants to look at WEX as a long. If I have to pause that long looking at it, we're in a wide trading edge range for WEX from about 150 to 75, 70. What's the top of that? 180. So 150 to 180-ish. Until we break down the bottom or break above it, I don't see a trade that I like. The prime reason is, what's the reward versus risk? Have you seen a buy signal yet? No. I guess if you tried to anticipate the move back up, your stop would have to be below the low here of below 150.67 somewhere. But we could easily go down to this level right here, 147.69, and the closer we get to that 50-day moving average, it acts like a magnet. Bob and Mel are arguing over BA short. Probably a little late on the BA short here. We're now at a bounce level. Maybe with another bounce up and then a rollover, it could work. I think there are better shorts out there though. Bob and Mel. Thank you, Mr. Ed. Pluralsight wants short. Yeah, below the current levels around here on 1650. First target would be 15. The next target area would be around 13. GLD for a long. Yeah, gold does look like a long trade here on GLD. Let's back out a little bit. Let's look at the area chart. Oh, we have to go back a long ways to get to any possible resistance levels. But yeah, anything over the current high, the recent highs of 166.75, looks like it's set up for a long. Vic, is a recording of the class which interferes with work hours. Are you talking about, Vic, the trading room? The trading room is not recorded primarily because by the time you would get around to, well, first of all, it would be a long ass recording, and trying to find the trades would be difficult. If you are a member, though, you can get trade alerts if you were able to, say, sneak out and take a break from work. Doug and I both know how to trade while we have another job. I did it when I was working for Raytheon in the early 2000s. I was working a vault, a secure facility. I'd set up my trades based on the night before look at the markets and the pre-market before I went to work. I'd sneak out at lunch and do a quick look at how the trades were going, make any adjustments, and go back in and look at it again. But no, there are no recordings. Okay. You're welcome, Doll. And thanks, Ed, you already answered. Short RCL. The cruise lines are probably already done. When they did that bounce up above the 70s and then rolled over, look here. In fact, let me do this. Lower highs. After we did this bounce back, bit of this up here, we got a sell signal. Wait for the bounce. We got the inevitable bounce in the rollover. We could have and should have gotten short around 64 to 65 and pulled in $15 move. I think it's a little late now. We're now back in towards the confluence area. Whoops. Yeah, we're starting to get down into the body here where we got a lot of people who've dibbled in the past. I think we're going to get more people dibbling again. That is not to me, unless some news comes out that has not been factored in. My stochastic is telling me what I'm saying as well. Unless any news comes out and really causes it to go lower, my technicals tell me we've missed this trade. So, sorry about that, Kevin. MT wants to know FAZ rebalances every day. They have to buy and sell options to stay basically neutral. So that if they, well, what's the best way to do that? Let me bring it up. Hold on. All right. This will cover more than I could probably say more succinctly. Go look there. Another thing you should go and look at is go look at if you're, well, let's see who's doing it. Direction, Direxion. Okay. Go to their website and read about it, and they will talk to you about rebalancing as well in each one. Where's the U.S. financials? They have well, it's not showing up there. But anyway, go to the ETF sponsor, and they will talk to you about it. Yeah, but he's really talking about the. Okay, hold on. Gotta get back up. Now, the room. You're welcome, folks. Stella, Harvey, Mel. Steve, is there a seasonality where markets go bearish after the 4th of July? I've heard of bookends where, sell in May and go away. I don't think that's as true anymore as it used to be. I mean, things work for a while and then they don't work. You'd have to figure it out. There are seasonal periods if you're looking about the overall markets, and yes, there are seasonal periods within seasonal periods. In fact, I don't have my phone with me. I'd look it up. We're coming up on the next seasonal trade around the 4th of July. Actually, we're going to have a seasonal long period in the S&P, the ES, S&P E-minis. And they usually last anywhere 4 to 10 days. I'm trying to remember where I got that. And so I don't know. It's a little bit after the 5th. I'd have to walk away and go find my phone, but I dropped it in the I don't know. I left it in the kitchen so that it wouldn't ring on us. Okay, Trader's Almanac. Yeah, I guess that would work. All right, any general questions out there that we could? D, who's in the Hit and Run training room? Yes, I'm in there when I can be. Here lately, I've been having some times where I could not be in the room. Rick moderates the room. Rick Sadler, really, really great guy, good trader. If we were able to follow his trades, which I do not advocate following somebody's trades unless you have to own your own trades. But he's made a lot of money lately. He's a good trader. Doug Campbell, really excellent trader, and a really excellent teacher and educator on options. And of course, Ed is Mr. LTA Scanner, is always in there helping. I'll post some stocks that I see. I'm really picky and choosy about my trades. I'll do a lot of futures trades. Intraday, very short term, 5 minutes, 3 minutes, 15-minute trades. I normally don't post them unless I can see them coming up and setting up. They happen so quickly. I'll post them after the fact so people can learn from my setups, and I'll be happy to talk to anybody about the setups, but usually it's after the fact because they're just moving too fast for me to type it in and get it in there. I'd be doing you a disservice because if you tried to follow me, you're going to probably be out of sync and late. So unless I was actually moderating a room and you saw my charts and I was able to talk from that, it's just not going to work. All right. I want to say, everybody, a couple of things. Thank you for showing up. And let's go back to the charts real quick. Right here on my YouTube channel, later tonight, I will have the recording out there. In there, if you look under there and do the search, you will also be able to find a number of free videos that I've done on my styles of trading, to include how I trade gaps, how I trade earnings, how I trade Stochastic RSI. I think is out there. We've got about an hour presentation there. Give it a shot. I think you'll enjoy it. And if you have any questions, just let me know. And if anybody has any questions or wants to chat with me, I can be reached at my email of topguntrading2@gmail.com. All right. Please, on the subject matter, even if it isn't about coaching, put coaching in there, because I will get a flash pop-up from my Outlook telling me that I've got an email from somebody, and then just ask a question or ask away. All right, folks. Thanks very much. Be smart. Be safe. Again, social distancing, being smart about exposure to others, and we'll get through this all. All right. Take care. Ta.